Hello everyone, this is Teddy Keckstedt from ForexTrading Unlocked, and we are here on August 28, 2020 with a Forex market analysis for you. And we're going to see what's going on with the currency crosses, but first we're going to pull up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And with that, we're going to go to our live screen. So here we are at the forex-trading-unlocked.com website. Please remember to subscribe to our YouTube channel down below so that you can be alerted to when we have our other videos that come out. So we're going to toggle down here. We have the workstation page pulled up. We're going to skip past the numbers and see what's going on with the Euro US dollar. Now, just as a quick review, let's pull up the dollar index chart for you real quick to show you how much the dollar index has been under pressure. As of late, it has been breaking every single day for almost the past 2 trading weeks, and continues to weigh heavy against the other currencies. So the dollar index has definitely had a beating from the euro, which is our biggest component, and also from the pound, but many other currencies as well. So let's go back to the euro US dollar and see how things are faring today. So the market is slightly lower. It is coming off of its new move high that was set yesterday on an explosive Monday, for, pressing through resistance. We have some numbers down here. So currently we have a little bit of a pullback. We have failed to make a higher move high today so far, whereas every day for the past couple weeks we pretty much have been doing so. This has been the biggest driver against the dollar index. Now currently we actually have a short euro position here. We are slightly up in this position, short from $1.1742, and we are long from yesterday still in the US dollar Swiss. So we'll take a look at that market as we get to it. But first, the euro US dollar. So right now we have some downside corrective targets of $1.1338 down to $1.12 even, basically. $1.1065 would be our extreme, which would come down to our upward sloping support line here, holding the trend intact from the beginning of March through where we are trading today. Now we have to see how we end today. U.S. markets are just opening, and most of the European markets are getting ready to wind down, and we have the Asian markets that are closing. So we have the basically the U.S. trade going on a Tuesday. We'll see how this trade unfolds over the course of the day. We're not looking for too much action, especially since this move has definitely pressed on in a big way yesterday. So is it possible to make higher move highs yet? Absolutely. So remember, we've been making higher move highs and higher move lows, which is indicative of a bull trend. The trend is your friend, so we're not trying to call a top, but right now we are on a little bit of pause today, at least in the euro. Remember, this is the biggest component of the dollar index. It is also the one that has rallied the most versus the dollar, recently. Now let's look at the British pound US dollar. The British pound US dollar is the second biggest component of the dollar index. This one is pressing higher move highs today, continuing forward with the charge against the dollar bulls. So that the dollar bears have been wreaking havoc, and you can see it when you look at this second component of the dollar index, continuing to push higher move highs and higher move lows, maintaining the upward trend. Although it is gradual, it is still in play. So we don't have any signals. All we can say is that when I buy signal here a while back, it has already reached its target. So we're just going to continue with the momentum right now and wait for either a continuation pattern to the upside or a sell signal. But right now we are just running with the trend. So we have the US dollar Swiss. This is one that is kind of funny how it had been consolidating for most of the months since March, where most markets were swing trading very nicely. This one had been consolidating from March into the end of May. We had a little sell-off quick in June, and then it just kind of grinded lower, into July. But this last week and a half, the Swiss has finally gone with the other European currencies and just pounding the dollar. Now this is all probably going with the way things are going as far as with the Fed, not just our Federal Reserve, but also the reserve banks around the world. And I think that we were bearish on the dollar for a while. We were kind of wondering how this consolidation phase would hold in the dollar index, because the dollar index became not quite as good of an indicator over the past month or so. Right now, obviously, the dollar index is a very good indicator because so many markets are slamming it. But the Swiss is the one that is intriguing because it fell out of bed, and as you can see, the way the severity of this trend is going. Oh, we have someone in the chat, so let's say hi to our person here in the chat room. So here we have the U.S. dollar Swiss, but let's see, we have someone here joining us. Damon Invite. Hey, what's up, man? Things are going good. Do you have any questions for us? Let's see if we've got any particular questions for us. So right now we're looking at the U.S. dollar Swiss. This one also, remember, is the trend is your friend. And this is like the pound. It's a very nice even slope for this trend. So right now, where we're very severe in the past week and a half, the overall trend is actually moving at a very nice pace. This chart looks a lot like the dollar index chart that we looked at initially. Let's pull this back up. See this? Dollar index looks just like the Swiss. Does that mean the Swiss is going to look just like the dollar index moving forward? Not necessarily. But we do know that the Swiss is one of the flight to quality currencies, just like the dollar and the yen. Speaking of which, the dollar is falling apart versus the yen. Now, this is a scary trade. And this is another reason why the dollar index is getting pounded. You have the euro, you have the pound that are making new highs against the dollar, and the Swiss. So these are a couple of our biggest currencies. And then we have the U.S. dollar yen, which is also one of our biggest components of the dollar index. And it was going sideways until the last 3 sessions. Now, if you'll notice, this sell-off has been going on for a week. Now, we've had very tight range days for most of the trading for the past 3 months, except for a couple swing trades that don't seem to follow through. You can see how this one had a nice explosion to the upside. It reversed, basically went nowhere, and just has been riding support for the past couple months. Now, we are definitely, obviously, riding support right now. Today, the market is hitting new move lows. And the way I have to say right now, the way to look at this trade is that the trend is your friend. Dollar weakness is there. Right now, you have to look at a sell dollar rally forecast until we have a valid signal. Now, we do have something that's shaping up. That's why we have these counter trend trades. We're obviously short the euro US dollar and long the US dollar Swiss. That is because we have a couple of intraday things that have led up to us having a short-term counter trend trade. But we have our stops are tight, excuse me, and any type of reversal on that, we are definitely continuing to go with the momentum, which is dollar bearish right now. So the U.S. dollar yen here is still falling apart today, and I would say use caution with this one. I'd be careful selling into new lows. I definitely would be careful not trying to buy this thing. And don't be surprised if all of a sudden you have what happened here just 2 weeks prior, where you had just nothing but choppiness, up, down day, up, down one day, up, down. It's just like you're pressing the highs, and range traders make a fortune in this kind of a market. Swing traders get slaughtered. So I'd be very careful with what's going on. Now here's another extreme. You can see Australian dollar, U.S. dollar made a higher move high last week. It has failed to do so today, but it looks like it's going to try and poke above that high from last week again, or at least try and challenge it today. This market has been rallying since March. The trend has stayed intact for quite some time, although the sideways trade, it seems to be more of what is going on. So it's having a lot of trouble to continue to pressure the dollar. But even when the dollar was strong versus other currencies, the Aussie just seemed to keep on going. So a lot of that could have to do with the surge in certain commodity prices, and also with China coming back online to whatever degree that is, considering that Australia is one of their biggest commodity trading partners. So, but outside of that, we don't have any trade to look at here. The trend is your friend. Higher move highs, higher move lows. Use caution. Wait for a signal before you try and fade this trend. Now we have the New Zealand dollar, U.S. dollar as well. Excuse me. And then we have this one had made a higher move high and is lower on the day. So we have a little bit of divergence as far as that trading zone is concerned. The New Zealand dollar is the only currency that seems to be having weakness against the dollar. So the yen is strong, the Australian dollar is strong. New Zealand dollar is starting to show some weakness, kind of like the euro, but maybe it's probably because it's just overdone, and I wouldn't say a reversal signal is going on. I think you have more of a profit-taking type of situation going on. So there's not much to say about the New Zealand. This is pretty much looking the same. Now here's where I want you to kind of look and see where we have some dollar action going. Definitely don't want to tell you to trade this market, but you can see the Turkish lira. It was going sideways for quite some time there, over a month after having incredible volatility. And now here we have an explosive move to the upside today. Yesterday we had a big rally. It fell apart. And then here, boom, today we have another explosive rally. Now here's the interesting thing is that after having made lower move lows and lower move highs, we had broken out with higher move highs, higher move lows, and now higher move highs, which is indicative of what? Continuation of the bull trend. So the dollar seems to be getting strength in some of the lesser currency crosses, which may be an indication of the slowation of dollar for a corrective move. I'm not calling for a bottom, not calling for a change in trend for the dollar, but it wouldn't be out of the realm of possibility to see at least a couple-day corrective move in many of your currencies. Let's look at the U.S. dollar Mexican peso. The U.S. dollar Mexican peso had some problems yesterday, but as you can see today, it's trying to turn things around. Higher or lower move lows and lower move highs have been the equation here, so bearishness seems to be in place. But I would use caution with this one, because if the turn is going to come for dollar support and a possible dollar turn, I'm already showing it, the peso and a couple other currencies that will probably be the first signs of upwards strength and momentum for the U.S. dollar. As it ekes into those currencies, it'll probably help to set off a profit-taking move in currencies such as the euro, the pound, the Swiss, etc., where we're not calling for a turn in trend. We're just looking for a short-term counter-trend move, which seems to be developing here. Let's see here. We do have some questions here. Johnny Gar, what do you think U.S. dollar swish with long? All the indicators from TradingView is saying it's sell for DW and M, and it's on the downtrend for the charts. Okay, so we will go and check this out for Johnny Garb, and let's see. Here are some levels for you. All right, so for Johnny Garb, let's see. We're going to pull up the U.S. dollar once again, if we can get the symbol in here correctly. All right, here we go. All right, for Johnny Garb, we have the U.S. dollar Swiss. Okay, so you want to know more about the longer-term trend. All indicators are trading view is saying for the DW and the M. Okay, all the indicators. What do you think for long? Okay, so for long-term, let's look at this. If we look at the monthly, now remember what I said earlier in this webinar, the dollar index in the short run over the daily over the past couple months looks a lot like the U.S. dollar Swiss. Now here's something critical to look at. Okay, so look at where we're trading right now. I'm going to put this little line here, this little cross line here. As you can see that we are trading just below the bottom that was set back in February of 2018. And remember that we just took out last week, recently, the low that was set in March. Remember in March we had that extreme volatility where we made a lower move low and a lower move high and continue this downtrend where we first had a consolidation and now we've fallen apart in key support. If you'll notice, the market has fallen down to this level of around 91.65 where we're trading now. It fell back here in 2012, bobbled around off. It did get underneath it, but this seems to be a very big accelerating pivot point. So it's either going to be a rock solid support or we have a chance at definitely spiking down. Now let's look at this. This is January of 2015, so that's 5 years ago. This was quite a range in the Swiss, where it had set a higher move high and a higher move low all at once. and then it grinded higher, continuing to do so for the next few years and even into 2020. Now, the one key note here is on the longer run is look at what didn't happen. We have this high here and this high here. These are kind of setting the upper boundaries. So as you can see, we had made lower move highs, lower move lows, and this is what we're doing once again. Overall, this is a big sideways for the past few years, but short run, I would say even though we have a very steep trend, use caution in the short run right now where we're at. I would look for rallies to sell. One of the reasons I say this is because, like I said, with the other currencies, we're starting to see a potential slowdown in dollar weakness. Usually when you see something like this is where we get a quick correction for markets such as like the Swiss, the pound, and also the euro. So right now we are obviously hammering support right here. So on the monthly, we're hitting critical support. Now let's look at this on the weekly. So we're very steep on the monthly. We're very steep on the weekly. This week is the week that's touched off the new lows. Now, when we hit extremes like this, you don't want to catch a falling rock. But look at this momentum. Over the past, let's see, we've had negative weeks now for 1, 2, 3, 4, 5. We're on the 6th-week down week in a row for the U.S. dollar Swiss. Before, if we had any type of, look at this mixture. We had up, down, lots of choppiness. This is very directional trading. The dollar bears are wreaking havoc right now. So we definitely are not looking for a big turn, but to see us get a little correction back up to 94, 93 half would be most likely where we're going to probably see a little bit of a turn to. And so let's look at this. I would look right now to find a place to sell higher if you're going to be a bear. If you're looking for a turn, I would have to say wait right now until you establish a lower move high and then fail to make a lower move low, meaning then look to buy into new lows. So right now is not, I think, the time to be looking to get long. It is oversold on all your indicators. You can see here from our trading platform from MT4, obviously we're long the dollar Swiss. This is obviously a loser because today's trading is burying it once again. But that's the other thing you have to look at. We have follow-through momentum to the downside in the Swiss, which has been mostly a consolidated trade for so long, and now all of a sudden it's trending along with the other currencies. And while the other ones are starting to at least have a little pause in momentum, this one continues to seem to batter. It's overdone is the way I'm looking at it. So the lower dollar goes in line with what the Fed wants, the U.S. Fed, not necessarily what other central banks would like. I think that you also have to look at the euro, where the euro is starting to run into territory where the EU, especially with what's going on with the coronavirus, and now they just launched a bailout package, it's going to be super expensive if the euro continues to maintain its strength and hold just where it's at now, let alone if it starts to pressure the 120 area. And I think that that's going to be another thing that's going to impact the Swiss as well. The indicators are obviously overdone and way behind now. I mean, the velocity of the rally that we've seen in the euro and the break in the Swiss has been very extreme for the past 2 weeks, 3 weeks. So I would definitely be on the edge of caution when it comes to buying into this U.S. dollar Swiss. However, obviously we are short-term bulls. If you look at the hourly, we can, on an intraday basis, this looks ugly as well, continuing to make lower move highs and lower move lows. Could it be basing? Well, absolutely it could. I would be very careful. Like, for instance, if you're buying into it now, I would use a tight stop. As far as the lows are concerned, I wouldn't be risking too much as far as where you want to look for this trade. I mean, your risk-reward ratio, I would think right now, you got to look for a nice size correction. So I wouldn't be looking to have less than a 3-to-1 or 4-to-1 profit objective. So which would be a daily scalp. And right now, trying to trade against the trend on an hourly basis, that's, unless you're going to be sitting in front of this and really monitoring it, I would be very cautious with using that. Outside of that, I think we are looking for a correction. We are definitely bobbling around a key pivot point. If we had an accelerated follow through in the euro and the pound, then this U.S. dollar Swiss, forget about being a bull. Okay, so Johnny Garb, if you're still there, that's the one thing you have to look at, is that if you see a major move in momentum in the euro and the Swiss, if the euro gets up to like 119 and the pound continues to pressure higher move highs, then this U.S. dollar Swiss is going to continue to fall like a rock. And then, like I said, use these other currencies as a precursor. Once you start to see a turn, like a solid basing, like you see the U.S. dollar yen turn, you see the Australian dollar and New Zealand dollar start to fall apart against the dollar. And when you see a correction there, I think then you'll have confirmation that you'll get a decent bounce in the U.S. dollar Swiss. So use caution trying to buy into this one. Obviously, we got in too early yesterday, but we'll see. Maybe the euro and the pound will help us out. Okay, cool. Gotcha. Thanks for that. Also, do you believe in correlation pairs? Because euro, U.S. dollar, and U.S. are opposite correlations, so I sold off Swiss and bought the euro. Yes, I do believe in correlations with pairs. There's also divergence of pairs. The one thing you have to be careful with, and I think right now, you have a big correlation with the U.S. dollar Swiss and the euro and the dollar as far as how they've been trading for the past week and a half. But use caution, because the U.S. dollar, remember, the Swiss is always it's a flight to quality currency. So that's one of the reasons why, if you look back in March when we had the big shakeup in the currencies, the Swiss was the first one to consolidate, and it did so for a month and a half, making it a very tough swing trade. Obviously, we've been trending lower since the end of May into the end of July is where we are now. But remember, even in July, we had that nice little basing where, if you look at here from June 11th, basically until the sell-off began on July 16th, which was a month, we had this consolidation where it was just chopping around between 95 even and 94 even. So as far as that's concerned, there is a divergence at times, but right now I think the correlation trade is definitely in place. But I would use caution, because the Swiss, like I said, is a flight to quality currency. It tends to consolidate. It trends very nicely, but it doesn't necessarily follow through like the euro and the pound will on exacerbated moves. Hopefully I answered that question. So let's see. So you are opposite correlation. You sold the Swiss and you bought the euro. Okay, so all right, so you and I are on the opposite. Well, so you're on the opposite end of the trade that we are right now, short term. So we'll see. We'll see which way it goes. Hopefully that your stops are in place. I know mine are, and I have my target objectives. And yeah, I think that as far as the correlation, it definitely does exist, and that's why I looked at, like, when I break down these webinars, you'll notice that I do the euro, the pound, and the Swiss, and then I rotate to the yen, the Aussie, and the New Zealand, trying to go with trade zones. And that's why I also do the Mexican peso with the Canadian dollar, which we didn't actually cover. I should pull that up real quick, because there is something. Speaking of correlations, you know how we were talking about how the dollar was getting hammered, except for in the peso, a slight little turn, a Turkish lira. Here's the U.S. dollar Canada, another one that, if you really look at this one, even though it's been breaking for the past month, it's really in a big sideways over the past month. So it's didn't make a newer move low, and this is something to think about. Remember your correlation trades you were just asking about? This is where we start to see divergence. U.S. dollar strength coming in the lesser currency crosses. As they start to fill up and gain strength with the dollar, that usually starts to put a dampening on the other major currencies. And there's where your correlation trades come in. That's showing the rotation of dollar strength and dollar weakness. Something that I use right now with these webinars are usually dollar focused, but you can always do a breakdown of currencies versus other currencies as well. So, like, for instance, when you do the euro versus the Swiss. So you have the euro versus the dollar, which is very strong. Look at this, the euro Swiss. Now here's something that's very interesting. The euro and the Swiss have been crushing the dollar for days on end. Look at what's going on with the Euro Swiss. It's just chopping around, chopping around. Now it's making higher move highs and higher move lows, but gradually. So, and then look at today. The Swiss is still strong versus the dollar. The euro is weak versus the dollar. The euro is weak versus the Swiss. So this is something that we can see as far as a correlation trade. So is euro weakness there against the dollar? Well, if it's against the dollar, which is a flight to quality currency, and it's also weak against the Swiss, there's a flight to quality currency. Let's look at the euro JPY just out of curiosity and see how much strength or weakness there is here. Aha, so here we have the euro is starting to weaken. So you can see that the euro has had a nice trend versus the yen, failed to make higher move highs last week, and has been trading progressively lower, trying to make, it's been making lower move lows and lower move highs on an intraday basis. So we're seeing euro weakness there. Now let's look at the euro versus the British pound. See, now here's our correlation trades once again. We're trying to find strength and weakness. So here we have the euro is weak versus the pound, it's weak versus the Swiss, and it's weak versus the yen. And today it's even showing a little weakness versus the dollar after it's been trending strong against all these currencies. However, unlike the dollar that it's been making higher move highs against, all these other ones it failed to. So there's a divergence in wave analysis right there, showing me that right now where we have the short euro versus the dollar, this is probably a decent trade, not necessarily long term, but on the next day or so, it has a good chance at being a decent trade. Now here's the divergence. The US dollar Swiss, which we are long, this market continues to break and make newer move lows. And now we're looking at most likely getting stopped out. So this one, there is no core. This one, they have diverted. This one continues to have dollar weakness. There's no strength in the Swiss here. But here, when we have there's no strength in the dollar here. There's strength in the Swiss. There's no strength in the dollar. Conversely, in the euro US dollar, where they had been trending together, the correlated trade, right now we're showing weakness. And I think that you can screw all your other indicators. Currency versus currencies are always the best indicators, and that's showing us why we have that little bit of weakness. So with that being said, I think I've answered Johnny Garb's questions. There's no more questions out there, and we have now covered all of the currencies. But let's go and look at the euro US dollar once again. Euro US dollar. We will end where we started. Please remember to subscribe to our YouTube channel and check us out. Every time you get the little email reminding you of our videos, you can see what's going on in the Forex markets. So the euro is also trading here, still a little bit lower, kind of quiet. And the U.S. markets are open now, and we'll see what happens as the day unfolds. But I think that you're going to see, especially the euro with this where it's at right now. They just passed a bailout package in the EU. They don't want to have too much euro strength, especially versus the dollar right now, because they're trying to do everything the opposite of us with the coronavirus and everything else, but the dealing with the funding. So I think that for them, yeah, they're not liking the euro where it's at, and I think that you're going to probably see a retraction, not necessarily a change in trend, but this would be a good time to have a corrective move like we had here. Kind of a symmetrical, what was this? There was a high of 114.22. It got down to 112.5, so not quite a $2 correction. So our high was 117.81 yesterday, so maybe it break down to this 116, 115 area. This would be a very good corrective area. This 113.38 overall is off from this low to this high. That's a good, this is a little Fibonacci area here, which would put us into a good, back into a consolidation area. And if you go back in time, you can see where these pivots, how they hold as far as either being support or resistance. Right now they've obviously been support, so we'll see if we can fall back down to it. The slope has started to get rather steep. Odds are by attrition we're going to trade sideways to lower, maybe make inching higher with the new highs, but then falling back off of them. So I think we're running out of gas. So with that being said, I want to thank you very much for your time here. Just in case you're bored and you don't have a trade yet to see, because we do have one that's forming in the Euro US dollar. We'll see what happens with the close today. But check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. With it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And also check us out every day at forex-trading-unlock.com. I'm Teddy Keckstedt, and we will be back